Hey, Tim Draper seems kind of crazy when he's saying $250,000 by 2022.
You know what? It sounds crazy, but think about it this way. That's 4 years from now. That's a 3,000% return from here, which again sounds crazy. But over the last 2 years, Bitcoin's had a 4,000% return. So now, again, it's parabolic, but it would just be a continuation of the trend that we've seen.
As Bitcoin moves to become more institutionalized, though, in terms of investor flows, would we see those kinds of parabolic moves, or does the trading get sort of dampened, the volatility get dampened?
Well, the hope is the volatility gets dampened, and that way it becomes a lot more usable. Because the big problem with Bitcoin now is, using it as a currency is very difficult because of the volatility. You use it in the countries that Mark Mobius was talking about because you don't have an alternative. This is what you have to use. We'd certainly like to see with futures. This week we had big volume in futures. That'll hopefully tamp down the volatility a bit. That doesn't mean it can't reach those levels. It just might not do it as fast as it did in the last 2 years. It might take 4 years, like Tim Draper said.
What's your own forecast, Beeks?
Oh, that's my own forecast. Listen, I think if we can get transaction volumes up again, then there's no reason why this couldn't be at 25,000 by the end of the year again. We can make a new high.
And in terms of next week, this week was a very, very big week. What are you watching for next week in terms of whether or not we can hold these gains?
Yeah, this week was huge. You want to look at transaction volumes. It's starting to tick up. We're trying to make a bottom. This week could have been just speculative. We have tax selling rolling off. We have some short covering going on. So we need the fundamentals, which is number of transactions, to catch up to this a bit. And if we see that, then I do think we've bottomed here and we've got a sustainable bull run ahead of us.
Hey, BK, it's Seaberg. Question for you. I mean, you talk about adoption and sort of that driving the price higher, but as far as store value is concerned, store value, I look at it and say, we're looking at Bitcoin a lot of times through the lens of being an American, but other countries don't have trustworthy banking systems, don't have trusting governments. I mean, isn't that really the driver behind the value of Bitcoin over the long term?
Sure. I was talking to a friend today, and they said, well, why would somebody why would somebody put money into this? If they're afraid of their country's government, if they're afraid of losing money, when they could lose 25% on Bitcoin. And my answer was, well, listen, it's better than losing 100% if your assets are seized by a rogue government. So that is the use case today. It's definitely really volatile, but that's the use case today. And hopefully, as we get into the supply chain, we'll have a lot of other use cases.
Hey, Brian, cynical comment about the excuse that a lot of the push down was tax-related selling, when if the market in Bitcoin is two-thirds, probably in Asia, and I'd like you to elaborate on that, because it seems to me that is what we're talking about here. Why would that be U.S. tax selling that actually had been knocking it down?
Yeah, so there's a couple different parts of it. I think U.S. tax selling certainly had a piece of it. Tom Lee estimated at about $25 billion. That's a pretty big number. That would mean we'd have to take about $500 billion off the market. But then again, remember, we did have a parabolic run. People are going to take some off. We also had Mt. Gox was selling a couple $1 billion worth of it. So we had something, and we had transactions come down. So you had, 3 or 4 different things happen. I think tax selling was probably the fuel on top of it. I do think there is some validity to it, though.